Hi, I'm Dr. Doug Hirschhorn, your investment psychology advisor. Gold's a hot trade right now. Are we looking at a dip or a reversal? It's a great question that a lot of traders are facing right now. Current highs looks like it's 1441, and today it's trading down to about 1416, 1417 so far. Market's still open. What do you do in those situations? Do you run the risk of trying to buy this dip to continue on the extended rally, or do you think to yourself that maybe this is the beginning of a reversal of the trend? With everything that's going on in the Middle East and Libya and across the world with the uncertainty, it's a good question, and one that really no one has pure, perfect insight on. In order to make the best decision possible, what you have to do is weigh the risk rewards and the probability outcomes on that trade. So it's something called expected values that I have a lot of my clients look at. I had them look at the odds of it going up or down, and then if it goes up, how much does it go up, and if it goes down, how much could it possibly go down? It's not a perfect process, but it's one that objectifies the situation, so it takes your emotions out of the trade. Some classic mistakes you want to avoid is actually thinking about how much money you're up or down in the trade, or worrying about the fact that you've missed a trade and you have that fear of missing out and you want to get back into it, or you want to get into it because you haven't been into it yet. The market doesn't know those factors, so to make decisions based on those things actually hurts your performance and prevents you from making objective decisions and thinking like a trader. You want to always be thinking like a trader with that mindset rather than thinking like a person. You're going to experience emotions, but just put them to the side. If you have a process to follow, that'll help you put those things to the side. So let's walk you through this process right now. And again, there's no right or wrong answer. You won't know until the end of the day, but what you can do is make the best decision possible given the information. So let's assume that it's actually a 50-50 chance, meaning equal opportunity that it goes up from here or goes down from here. Well, then look at your edge, whatever your fundamental edge is, whether you look at fundamentals in the markets or you look at technicals, doesn't really matter. It's more about following those factors to make your decision, so you make the best decision. And so if you think it's a 50-50 chance of going both up or down, then you want to look at what levels it could possibly go up to versus what levels it can go down to. Trading success isn't really about predicting where it's going to go. It's more about recognizing which way it is going and then putting on a trade to reflect that, and then managing the risk on that position, keeping stops in place so you don't blow up out of the position, but then also making more when you're right and keeping your losses simple so you lose less when you're wrong. Thanks for watching me on this peak performance episode to improve your trading. I'll catch up with you next time, maybe later this week when we look at other markets and what's going on. Maybe we'll talk about oil. Maybe we'll talk about gold again. Trade well.